Longtime fans of the show should be familiar with the lender formerly known as Sue Pullen, and I'm pleased to announce that she's back, fresh off a rebrand and ready to help as Sue Mackey. Sue is a certified mortgage advisor at Fairway Independent Mortgage, an equal housing lender who focuses on finding the right product for you and your needs. She has over 20 years of experience helping thousands of homeowners. Whether it's purchasing, refinancing, or even a reverse mortgage, Sue will help. Sue's licensed in 36 states now, so reach out and let Sue Mackey it happen for you. The best way to reach her is just give her a call at 520-977-7904 or in an email, spullen@fairwaymc.com. Fairway Independent Mortgage has an MLS number of 2289. Sue Mackey has an MLS number of 206048. That email again, spullen@fairwaymc.com, and that phone number is 520-977-7904. Shoot Sue an email and let her know she needs to update that address. Disclaimer time. This is where I tell everyone to lighten up. It's just a podcast. Trading is like that roller coaster at the amusement park. Thrilling, unpredictable, and potentially stomach-churning. What works for one person might leave another clutching their hat in the wind. Our hosts and guests, they're awesome, knowledgeable, full of insights, but we're not financial advisors. So don't rush to make any investment decisions based solely on our banter. Always consult with a professional or do your own research. Plus, let's face it, we like to have fun, laugh, enjoy the trading ride together. It's all in the name of good podcasting fun. So remember, take it easy, don't bet the farm, and keep your seatbelts on at all times. Thank you for listening. Hello, everybody. Welcome back to the China Shop, home of the podcast formerly known as Two Bowls in a China Shop. That is a working title. Part of today's agenda is to decide on a new name. I'm your host, moderator, and muter of long-winded answers, Kyle. And joining me tonight, we have Baba Yaga, Mr. Banks of Vanta Trading, along with our longtime China Shop friend, Flary. On the agenda tonight, we have naming the show, followed by a discussion on trading during high-impact news events. We'll also revive the good, bad, and ugly segment, though with less gunplay this time around, before wrapping things up with some bold predictions. If you're listening to the podcast version of this, you probably already noticed the new release schedule. These will be releasing on Sunday night. They'll be ready for consumption at the start of the week. But if you don't want to wait, hurry up and join the new combined Discord. Hang out with us while we record. Guest interviews, mini-series, and other... Is that how you say that? Mini-series? Mini-series?
Mini-series?
Like fishes?
Single S? Single S?
Sirai? Mini-Sirai?
Mini-series.
Is it a gackle?
Yeah, it's a lot of them. And other bonus episodes are shifting to Thursday evening releases. Last thing I want to say is we'd love it if you reached out to us. You can either DM us on Twitter or Discord. You can even send us an email at suggestions@financialineptitude.com, or at least for now, because that domain will be changing very soon. Before we dive into today's discussion, let's check in with everyone, find out what they got going on. Banks, Baba, how are things going over at Vanta? You got anything new to talk about?
Nothing really new on our end. We're doing obviously the merger that you just talked about. So we got the free site, we got the paid version through Vanta, and then we're just steady going on the trading grind.
How's the evals coming along? You getting good feedback on that?
Yeah, so we've done about 9 so far. We're hoping to get a couple more, obviously added to that, and then actually we're starting the second rounds for the first people that went through it. So I'm hoping that picks up a little bit. I think it's a great value, added to what we're offering right now.
I love what you guys are doing with that. I think we just had a sort of impromptu one, but we got to schedule another full blown sit down and review again, I think.
Yep, absolutely.
Hey, Flary, what about you, man? What do you got going on? Any big poker tournaments?
Oh, man. We just finished a big series here at the local casino and made a day 2, top 10 in stack, fizzled, made a final table in one of the events,
Nice.
busted first out. So it was like one of those run good early. But yeah, there's some big stuff coming up here towards the end of the year. So playing good, running bad towards the end, but it's a fun journey.
Anything else you want to talk about?
Nothing really to promote. Probably by the time this is out too, it'll be a little bit late. But running like a 1 month, whatever you want to call it, intensive, more of like a process download on some of the work that I've spent time building, and just my approach to the markets. The end of the year this year has been good, and with the end of the year kind of coming up, going to kind of slow down a little bit and take some time to teach, and we'll do like a 1 month thing and then close it down. So no long run Discord or anything like that. I'll leave that to you guys, man. You guys do a great job with it. So that's kind of what's going on in my world.
I love it, man. I'm about to jump in there and check it out. Okay, so what do we got lined up for today? I think the first thing on the docket is to talk about the name of this show. So we got some suggestions that kind of came in as we are chit-chatting this past week. So does anybody have something they want to present to that can top the podcast formerly known as Two Bulls?
Anything probably could top the title formerly known as. Only Prince can pull that off, dude.
I mean, there's a few people who've done it. I mean, come on.
I mean, my mini trader, Joey, he whenever I ask him what the markets are going to do, he always says up, down to the moon. So he suggested Up, Down to the Moon podcast, followed by the Dinosaur podcast. Both kind of have a nice ring about them, you know. But,
I kind of like Up, Down to the Moon, but Dinosaur, man, I still have nightmares about velociraptors after reading Michael Crichton's Jurassic Park at too young of an age.
well, we can pitch Dinosaur podcast for the bad memories, but let's not sleep on Up, Down to the Moon podcast. It's a thing.
My son said it should be grabbing liquidity. He always asks me. He's like, "Hey, did you grab some liquidity today?" So I guess he hears that, conversations from time to time.
How old's your son?
He's 10.
10? Okay, so he's probably not making innuendo.
No, not at all. No.
He's not quoting Trump. Grab him by the liquidity.
Yikes.
Way to take it right there, man.
Oh, sorry, I can't help myself sometimes. Actually, I think Flary, you had a good suggestion. I kind of like the idea of the trap traders.
Yeah, trap traders, you're stuck with us, right? It's like our tagline, or at least stuck with most of you guys.
I'm probably gonna use that tagline regardless. I don't know. This is a tough one. I think my favorite so far is the True Traders podcast that Baba Yaga came up with, and I like that because I think that kind of embodies kind of the idea of what we're trying to do here. One of the other ones I was thinking of was kind of like a not we trade, but like trading together, or something like that. Together we trade. That was a tagline that I kind of liked because the whole idea is doing this stuff together, right? Together we're stronger,
or something like that.
I think you wanted I think you were insinuating that not everybody's a true trader. Does that sound about right?
I mean, I don't want to sound pretentious, but I think there's something to the idea of true trader versus a lifestyle marketer.
Explain.
Well, we've talked about this. All of us have.
I think we all have.
Flary, we've talked about this. The grind day in and day out of trading. Yeah, like you have great weeks, great months, whatever. That's cool. But I think there's a lot more. There's a lot more like fluff and marketing and lifestyle selling and like Lambos and mansions that people use to funnel people to whatever. And at the end of the day, if that's what gets someone in the door to a service they're paying for that they like, then like that's great, good for you, and that's awesome. But I think because I think the free market will manage all that stuff out in the end. But it just like the true trader, like this is really how it is. Like this is, hey, our process is good. Maybe it works for when me and Banks are on a phone call and we know what's going on and we know our own lingo and all that stuff. But when you have 20 people listening to you talk and work on trading, maybe reinventing and reimagining how to communicate is something that you should do. And so it's this work in progress always. You're always the true trading vibe is always eking out that little bit more, whether that's in your ability to communicate, capture an idea, capture value from the market. I don't know.
Bubba, what kind of car do you drive?
I drive a Toyota Tundra.
Nice.
Do you want the year?
No. That's good enough. Banks kind of dropped out. It looks like. I think his power went out at his house. He'll be back in a moment. Flair, what about you? What kind of car do you drive?
Which one? No, I'm just kidding.
You're every day. You're every day.
I've got a nerd. I've got a Kia, and then our sort of like family car, to haul all these kids and hockey around is an SUV. But
I noticed that I hadn't heard any Lambos yet.
yeah,
No.
there's no Lambos. I mean, not that I wouldn't certainly purchase one, but yeah, I mean, it's not part of the dream. The dream is like pay the electric bill. Right? Like,
Yeah.
I mean, as unexciting as that is, like the dream is pay the electric bill and buy
and not have to go to a real 9-to-5 job.
Yeah, buy the 15-year-old a car here, that kind of stuff. But hey, I mean, listen, if a Lambo comes from the excess, let's go.
I know, right? Like, are there good traders who are also good marketers, or has it kind of been one or the other in your guys' experience?
I don't know. I feel awkward about it, to be honest.
I hate that aspect of it, trying to market.
I mean, Flair, we've talked about that, dude. Like, I'm like, dude,
Yeah.
I don't know. Like, and you're like, oh, you got to just lay it out there. Cause I mean, it's almost like whatever you do to convince someone to come check you out is the thing that you have to continue to do to keep them there. And I just don't know if the type of trader, and maybe this is a bad thing to say, but the type of trader who would be lured in by like, if I was like a picture of me with like gold chains laying on the hood of like a Porsche or something, like by the beach. I just like,
can we get that image somewhere?
I'll send it to you. But a person like that's the biggest draw for them is that. I don't know that over the long term they're going to find what they would want actually with us. Yeah, I just don't know if the person who's like eager for that is gonna be eager for maybe like the work and grind it takes to get there.
I think you almost want the guy that's fallen for that already, been burned by it, and is now looking for what actually works.
Yeah, and honestly, like so much of the whole works thing is like, a lot of it, so much of it comes down to just a little bit more awareness and confidence, and the mental side is such a big piece of the puzzle, man. Like, with outside stress of any kind, like it can really affect your ability to perform. We're performing in the most competitive environment, I think, in the world.
I know. I think sometimes we forget about that.
Yeah.
What were we talking about?
Yeah, how did we go from naming the show to trading marketers to making
Lambos.
fun?
We started talking about true traders. That's the point, though. That's
True
the point.
traders. True traders digress.
True traders.
I like true traders, but I feel like in the same way we're talking, that the marketing side of this that is, somewhat like they exist. Listen, like there's somebody who has gone through the survivorship bias that's made a bunch of money, bought a Lambo, and wants to teach.
Yep.
Yeah, 100%.
It exists. Like
I can point to Eric Smolinski bought a Lambo with the money he's pulled out of the market. So yeah, it happens.
It's there. I don't know. Like, is there a synonym? We're doing challenging words today. Is there a synonym for true? Like, if I was new and someone said like, I want to listen to true traders. Like, am I doubting myself? Am I a true trader? How do we feel more inclusive? But I like the direction. But yeah, I don't know.
I wish chats with traders wasn't taken. Simple,
Yeah, that's
informative.
the problem. Somebody stole all these names.
You see, so when I was watching, or this was like maybe a few years back in the poker streets, like 10 years, 15 years ago or something like that, there was a YouTube little cartoon called The Micros, because in the poker games, the low stakes are called the micros, which is kind of like, I mean, we've got the micros and the minis. I don't know, maybe something along that. Like, is that where you start your journey, the micros? Not that everybody trades the micros. I don't know, something. But I like the idea of like something that says like anybody who's got the guts to step up and put their money on the line, or, commit to a process and try to pass an eval, like that, they just get the respect in my book. It's hard, and they don't make it easy. And like to your point, Bob, like this is one of the toughest games, if not the toughest game out there, to try to survive in. And, I think that message, I like that message. Like, how do we get that across, that all are welcome kind of thing?
Joel says trade runners never stop chasing.
Never stopping.
What is there a way to have something along the lines of like not this, but like if you were like, oh, this is like for every man, like some type of like very inclusive adjective.
Well, I like the tagline on that with it as being "Together we trade," to kind of get that message of inclusivity, to let everyone know that, hey, we're trying to do this together. Together we're better. Together we're stronger. We learn more together.
That's what flare-y means, right? Together
I
we
know.
flourish. I knew flare-y. Together we flourish.
What language is that again?
Haitian Creole.
What's the other flair? Isn't there French? Isn't that French for flower?
It might be, yep, which is part of the kind of the logo there too. But
it actually makes sense because flowers flourish. Yeah,
that's so poetic. My guy just shoots people and is like an assassin, and you have all this meaning in your image. It's beautiful.
I'm job creation in third world countries. Hey.
Oh shit! So I thought we had this thing locked up, but now you're saying
does banks have any banks? Do you have any title thoughts, preferences?
I mean, I don't want to sleep on the dinosaur one. That was pretty.
It was solid. It really was.
No, I mean, the catch line, I think that Kyle was talking about, I really do like that one. I mean, in the sense of the name wise, I mean, nothing really pops out in my mind. I like, some of the ones that have been brought up, but yeah, of my own creation, no.
The girls didn't have any ideas?
Oh, I didn't even ask them, to be honest with you. I should have. It probably would be like, it'd probably be like Mary Poppins, Let's Fly or something like that. They're big Disney kids.
Let's fly. That's
That's not bad, actually.
Come fly with me.
Oh man, how are we stuck here? This is no good. Time for a Twitter poll. We can go on to the next topic.
Well, the other problem we need is it needs to be a domain that I can still get, and also needs to have some of those keywords in there that can be discovered when people search trading podcasts.
I've got the domain site pulled up, so as soon as we pick one, I'm going to buy it.
I was wondering if somebody on the live stream would be doing that.
Are you going to sell it back to us?
I won't mark it up too much.
You'll buy it, then sell it back to ourselves. That's great.
Hey, listen, I mean, it's a trade.
Well, what can we do? What can we do around true traders? How can we modify that?
I don't not like true. I was just playing devil's advocate.
This is riveting. All right, I think it's time to move on from this.
Yeah, that's funny.
I think we got some good ideas on here, though. I think we should be able to make something out of that.
So basically what we have is like number 1 is True Traders Podcast. So we can say, are you down with TTP? Number 2 is probably Dinosaur Podcast.
I think that's got 2 out of the 4 votes, yeah.
Yep. I'll tell you what, I miss talking to that little guy every day.
Oh, we have to give him a spot on here one of these days.
Oh, like every morning, I used to talk to him in the car while they drove to school, dude.
Yeah.
Yes.
Oh, yeah.
Awesome. All right, let's put a pin in that then, and let's move on to the next roundtable discussion that we got here. I wanted to talk, since we just got out of this FOMC, and I think a lot of people had some struggles over this past week. Kind of wanted to talk to the group here and get your guys' thoughts. Like, how does your prep, how does your execution, how does all that change when we have high impact news events scheduled? How about we start with Banks? We haven't heard from you in a bit.
I'm not a big fan of trading news. If I do trade news, like a day like FOMC, like I treat that more of like a scalping kind of day, at least up until FOMC. I don't want to be in any big major moves. I really don't think there are big major moves before FOMC. So it's more of, good entries, quick take profits. Now, when I get into FOMC, the goal going into that is to have a little bit of money to play with after something prints, but willing to risk what I've already made. And if it's one of those where it's, I haven't had a good entry or something like that, then it's just something that I pass on. Like news, like, non-farm and stuff like that. Those are tough to just get positioned for. I do think a lot of those play really well, especially in what we're looking at now. But a lot of the times it's, even if you're well positioned, you're still not well positioned. at least for the wick down or something along those lines. But yeah, but in general, I would say I'm not a real big news trader per se. I know that like Baba had one of his best days trading on FOMC, but it's just not.
Oh, really?
Yeah, it's not one of my cup of teas.
Yeah, and I think the more people that I kind of run into through doing the interviews and just meeting more people in the community, it seems like the guys that really know what they're doing kind of seem to stay away from it more than I would have thought.
Oh, thanks.
Are you the same way, Baba?
No, I don't mind FOMC so much.
Mm-hmm.
I feel like FOMC it does get wide and wild, but like Bank said, I mean, let's see, it was in April, I think, or March or April of this year. I guess my biggest, up until that point in the year, my biggest trading day, and probably for that quarter, if not for that first 6 months, happened on FOMC day. Now that day happened to set up really smooth, so I think it still boils down to like how are we postured and positioned going into that. To be honest, more so than the rest of it. I think obvious things would be like I'm not going to be trading as much size on the first swing at an FOMC trade. And then if that trade works out, it might be the only trade you take, because if you're, riding the lightning, then, it's great. And I mean that riding the lightning positively, not like the electric chair.
No, more like Metallica, right?
Yeah, like if you nail it, like I mean that's the thing. It's high risk, high reward. It just can't be a gamble. And I think that if there's a setup that you can reasonably risk, then it's not a gamble. It's a risk like anything else. But the reward potential is pretty high. Now I'm not talking about being in a trade when the news drops,
Right.
or trying to enter when the data feed is blipping.
I've tried that before. It does not work.
Yeah, but like either if much earlier in the day there's an opportunity to get positioned, or post news, like it usually goes minutes and then the speech, and so on the backside of the minutes would be where the trade opportunity usually lies, in my opinion.
What about your prep? Does that change at all?
I probably look a little wider. I think that's one thing Banks and I look at. It's like going into big news in general, whether it's in NFP or FOMC or whatever. I think there's a tendency to kind of, okay, if we were going to stretch for some liquidity, where might those edges be?
Mhm.
And then you look at like value and balance as well, and kind of paint a picture of, okay, here's the playground, and then that can kind of give a little bit of perspective to where you might want to engage. But also like watching the auction unfold, like at hand after the minutes when the speech starts, it can be a little bit wild, but I do think there, if you've already reached a real outer edge band of what what your work would show, then there's an opportunity, to work a trade back in as everything gets digested. And that was the trades that I remember, which it was multiple trades. That's the other thing, is I know somebody, a guy that we used to trade with, captured like 350 points on a FOMC day.
Ooh, nice.
And a runner. So it was a pretty big trade. And then the runner was like 350 points. And my FOMC trades were, none of that day was like massive. It wasn't like multiple 100-point runners. It was just a ton of, 40 point rips or dumps that I was on the trade for. So
Right. So you're not looking for those home runs still, even during those. They just play out quicker, kind of thing.
yeah, just you can get a full TP, like a full scale, pretty quick. I think contextually, if there was, say, we swept like the outer edge of something, a liquidity, a daily level, the edge of like a leg of an auction, and then pulled back in, maybe like holding that a little bit longer might make sense. But it's moving so fast usually that, I mean, and that was the thing with, we were talking about before today. Like, I don't like NFP so much as FOMC. When they fall in the same week, it's just a recipe for annoying trading, which we, talked a lot about this week just earlier. But I would prefer them not to be on the same week. And I don't like. I was gonna trade NFP today and tried to trade the long on NFP and couldn't get the freaking. I mean, it happened so fast.
Oh yeah, that was a snap. There was
Yeah,
no grabbing that
yeah,
unless you had an order just sitting there.
yeah. I did not have one limited sitting there like someone else did. So
Flary, did you have that limit waiting there?
his daughter.
My daughter.
That's
did.
right. That's right. Yes.
My daughter did. She wanted 950. She said the overnight consolidation, Dad. I want it. And I said, all right,
God damn.
get yourself a ticket.
Good for her. What about you, man? What do you do differently during the big news event type weeks?
I mean, as far as preparation goes, which I think is like a big piece of it, if you're going to trade data or econ events, I think you need to have like a slightly different approach, or at least I take a slightly different approach. I believe that the market, when it's in these low liquidity environments, it seeks places where there was previous high liquidity or large size done, and so what I typically look for is, are there new, I call them clusters, but like, are there new areas where large size or the aggressive auction has overlapped? Because one of my main setups is there a new cluster leaving RTH the day before we have data? We saw that with FOMC and ES this week. We saw that with NFP yesterday in NQ in the 937, 933 area. So that's kind of like one of my main setups. But as far as like where you're going, typically, you see people do like, oh, I'll take a 30 point, 50 point take profit or whatever. I think, in my opinion, if you're going to put risk on in that type of environment, it's a home run type of environment. Like for me, I'm not looking to get in, pretend like I can see the DOM and what's going on and like have limit orders or use a bracket. Like I'm trying to get in and see if this thing runs. And if I do have an order that I want to get filled, it's going to be usually pretty outsized. And again, like at these high, like, an area where there's trapped traders, north of 50 points away, and especially when there's a big void of liquidity in the general area where you're at, which I felt like we kind of had today with NFP when they bid up. Again, like I just think like having that outsized plan, if you're going to put risk on in that environment, is important, because you need to have an outsized target if you're going to have essentially outsized risk. Because I don't know about you guys, but you can't just like put a bracket on, click in, mark it, and hope that it works, because they'll skip your orders. I mean, I've had it happen, a bunch. So typically, if I'm trading those events, like you're at the mercy of the market button for me. So yeah, that's kind of my approach, is like look for liquidity spots, look for areas, clusters or whatever that I can get in, and then as far as like actual execution, which I think is the biggest part, right? Like, it's one thing to have a trade idea heading into these things. I have no idea, unless you have like some insider macro blah whatever idea, like how do you get in pre FOMC and then hope that whatever he says the market says is bullish? I don't get that. To me that seems like you're just flipping a coin. I'm sure to some people it's not, and they have edge in that, but for me, like I can't predict, oh, NFP is going to go up.
I don't know how anybody can even read it that fast. I think the only things that can do that is an algorithm.
Yeah, I mean, scraping or whatever's going on, but it's still, I mean, again, how they analyze it, or, I mean, if you're reading order flow, whatever. But so like for execution, for me, like there's two main things. One, I always want to be pyramiding into contracts in these events. So like, for example, in FOMC, let's just say you're looking to trade 5 total, or you normally trade 5. In an event like this, like I would look to get in, say like 2 at an area, and then when it pops, I want to be adding when it pops. So you're just like building this pyramid of like, I want to get to, I want to get to 5 ideally as a core, and if the trade works, I want to be bigger. So maybe you do like a 3, and then you add 2, and then you add 1, and then it consolidates, and then when it breaks out, you add 3, and then you add 2, and then you add 1, or however you do that. But like for me, the idea is get a position in at an area that you're interested in, and then add to that winner. Because I mean, a lot of times what you find yourself, if you catch the move, is that you're in this advantageous position of the market has popped, 50 to 100 points, and it's consolidating. And if it breaks back up to the upside and you average up, your average is one, well protected. The volatility has slowed enough where you can confidently put stops into the market that you feel are going to hit, and you get these sort of, like, I hate to use the term risk free, but like risk free multiple R trades. And the FOMC, I think, was a good example of that, where like if you caught the pullback low and you added after it consolidated right around that like 14.7 area, you got another solid push out of there that really it never came back. So adding to winners is sort of a strategy that I really like. Obviously adding to winners, right? But like not just like full bore, full porting in right away, sizing down and then trying to pyramid into winners. And then if I get it right, when it goes, then I try to get multiple R in those risk-free environments and take that second leg up or third leg up on multiple R. The other one is like just waiting, right? Like I would rather chase a move in data based on like order flow or something like that. So like, today we popped down into that 930-ish area, and when they popped down, they wicked up, and there was some like nice impulsive moves, whether it was buying balances, whatever you look at, but like there was an opportunity to sort of chase the move relatively quickly. And, for me, again, predicting, and flipping the coin first, it's just not how I would like to do it. And I don't have edge there. But like, if I'm watching this go and I'm watching my monitors closely and I see, one of the tools that I use that fires off something, like I would much rather the move do its thing in the beginning and then, chase it up once I see, buyers or sellers sort of stepping in and supporting the move that already was a low liquidity move. So, again, for me, adding to the winners, reducing size, and trying to build those multiple R's once we get the outside move or outsized move, and then targeting outsized moved. Like if you're going to put risk on in these environments, in my opinion, you're doing it, for these larger moves. It's not
you're making it worth it.
Yeah, I mean, it's not a risk 15 to make 30. It's a risk 30 to make 150.
Right.
So again, to each their own, but like that's my approach to it.
One thing that I've always had trouble with when trying to chase a move like that is not knowing when the move is getting too extended. And I think I'm starting to get a better handle on that, but I'm curious if you have any thoughts or things that you can look for to say that, hey, maybe wait for a better pullback here.
Well, I mean, for me, that comes with knowing where you believe the market's going to try to go, and having confidence in that. So, I mean, this morning we were down in the 930s, whatever. What price were we? We were at 960 when the data dropped. Well, 14,960. Where is the market going to try to go? It's going to try to go to 15,000. Like it's definitely going to try to go to 15,000. If it's a long, it's going to go to 15,000. So, if you can find an opportunity, whether it's a limit order, a market order, whatever you do, but like if you can get in and quickly kind of go, okay, well, we're, 50 points away from 15,000 minimum, you've got a 1-to-1 trade risking 50 points in a low liquidity environment. And we all know what would have happened if you would have given a trade 50 points worth of risk, from basically anywhere today. So, again, I'm not saying that, but like, I think like the knowing where like where your R kind of scale is important, because if there was a bunch of overhead resistance, like let's say we would have opened at like 14,970 for the data or 990, that becomes a much more difficult trade because the downside could go all the way down to like that 930s lows, the Euro Asia lows. And your upside, like who knows, maybe we pop 15 and we come back down, like that becomes a different game. So I think that's like a big piece of it too, is like, okay, I believe that we have an opportunity to go up. right? Like the market is bullish. I think we're going to go up. Well, where's the next logical, like outsized up target? Is it just right overhead? Well, now all of a sudden that becomes a difficult trade. Can you really give a trade room to work in a low liquidity environment when your target is only 30, 40 points away? In my opinion, no, or that's like an opportunity where I would just step aside and wait to see if the move like slows a little bit to give me an opportunity to get in. But today wasn't that. I think, it was fast, but, you have to be willing to kind of, if you're going to step into these low liquidity environments, you have to be willing to risk a little bit wider than you normally do. And, we opened in the 70s, 50-ish area, and, we had 50-ish points minimum to the upside. My big sort of like liquidity target to the upside would have been like 15,050. There was like a big cluster of delta from previous times we were up here, and there was a very, very weak high from the last move down. So when we started this move down that we just retraced, 15,130 was a single 1 hour candle move to the high, and that is like a super big tell for me. Like that's just weak. When you make a 1 hour move to the high that reverses and goes 1,000 points down on one single candle, that high is weak. So, again, 15,050, 15,138, I think it was, two very clear targets for bulls today from that event. And, when you have a target that outsized, you can start to build an idea around a trade and, give it a little room to work.
Can you expound a little bit more on that? What you mean by the targets there? You said the big reversal candles.
So as far as that move to the high candle, so if you look at a 1 hour chart on NQ, where was it? 1019 was the last move to the high. Single bar. So we made a low, it made a high, and then it dropped. So that's a single bar move to the low. So it made its own low and its own high at the same time. That's super weak. So 1019, 1 hour candle move to the high. That's been a big target for me for this whole move, or at least like I didn't think it would happen in 5 days, but here we are.
Right.
Yeah, so that like again, like this 15,138 when I was working on morning plans this morning, 15,138 would have been like my what are bulls trying to do. You also have some daily swing highs kind of up in this area relatively as well. But yeah, this 15,138, and then there was like a 15,050 to 15,060 was like an area where they've put in a lot of large orders. But again, like what I try to do is ask myself, like, what are it's a bullish environment. What are the bulls trying to do? Where would they be trying to go? And what do they need to try to sort of like check the box on? And for me, that would have been like, in a perfect world, we go to 15,138. Now, do we go from 14,930 to 15,138 in one move? Maybe, who knows? It's kind of a big move for NFP. But again, like it's 7:30 in the morning. I'm Central Time, but at 7:30 in the morning, you chase an order up, around 9:30, 9:50, or you set a limit and, you hope your stop gets hit, or you use the market buttons. There was opportunity to even risk, 30, 40, 50 points in this market. And you do that on a size that still dictates a dollar amount you're comfortable losing. Right. So I think that's an important thing is like, if you're going to trade these events, you come into them understanding the math of what you're getting into. You don't just jump into, 15 minis because you like the trade and, you have to give it room. Like, well, you can't just risk, 50 points on 15 minis if your normal risk on a given trade is, $400 or something like that, $300. Like you just can't do that, but you
can't do that in any environment though, or you shouldn't.
You shouldn't, but if your risk tolerance or your average R risk on a trade is, $300, well, you just do the simple math. Like, all right, well, where do I not want to see this break? I don't want to see this go below the Euro Asia lows. Okay, well, it's 930-ish. Okay, well, we're trading 960 right now. I'm going to try to get in somewhere between 50 and 40 and hope it holds 30. So 50 points on a micro is, whatever, $100. I mean, you could probably, get in 2 or 3 and, you're risking still relatively like that, $300 to $400 that you normally would. And the key is then you have to take it to the end, because you do that a bunch and you don't go to these places where you think the market has the ability to go to, in the long run, you're just going to get burned on that stuff. So anyways, I think like that's the key is like having have any idea of where, God, we're going to pump the ICT thing, where Price is trying to deliver, right? Like, where's Price trying to deliver? Where are the buyers trying to go? What are they trying to accomplish? And in my opinion, 15,138 would have been a great check the box. And, they went for extra credit this week, but
Yeah, a little bit. Longtime fans of the show should be familiar with the lender formerly known as Sue Pullen, and I'm pleased to announce that she's back, fresh off a rebrand and ready to help as Sue Mackey. Sue is a certified mortgage advisor at Fairway Independent Mortgage, an equal housing lender who focuses on finding the right product for you and your needs. She has over 20 years of experience helping thousands of homeowners. Whether it's purchasing, refinancing, or even a reverse mortgage, Sue will help. Sue's licensed in 36 states now, so reach out and let Sue Mackey it happen for you. The best way to reach her is just give her a call at 520-977-7904 or in an email, spullen@fairwaymc.com. Fairway Independent Mortgage has an MLS number of 2289. Sue Mackey has an MLS number of 206048. That email again, spullen@fairwaymc.com, and that phone number is 520-977-7904. Shoot Sue an email and let her know she needs to update that address. Anybody else have anything they want to throw in on there on this topic before we move on to something else? All right, then. I think we should do some good, bad, and ugly.
Da-da-da.
Fancy sound effects.
Saucy.
All right. Are you guys familiar with this from the old show, the old format?
no, but I'm dreading this.
Okay, so good, bad, and ugly is where I'm going to make this because we don't have time for everybody to do one of each, but you just pick something from your week that was either good, bad, or ugly that you felt like offers a teaching moment or a learning lesson. And I can kick things off if you don't want to be embarrassed.
Fire it up.
All right, so Tuesday, I let frustration boil over into my trading, and I took a max drawdown on an eval account. It was nothing to plan. It was nothing. None of the trades that I took that day, other than maybe the first one or two, were anything that I'd be proud of or even feel like writing in my journal, to be honest with you. But the worst part about this whole the whole experience, I think, was that I noticed I was withdrawing into myself while this was going on. Instead of being active on the voice channel with Baba and Banks and talking about what I'm going through, what I'm trying, what I'm seeing, I just kind of completely withdrew into myself. I think I muted myself, so just kind of listening off in the background while I was clicking buttons. And that is not a recipe for success. So I've been spending a lot of time going back through my processes, trying to figure out where the breakdown was in there. But I think that the important thing for me to learn from this experience is that I need to recognize when I'm withdrawing like that. And that needs to be a cue to me to either shut it down or start speaking up about what's going on. Let someone talk some goddamn sense into me.
Well, Kyle, I'll chime in on that because
Yeah.
Tuesday I kind of had a bad day too.
Yeah, it makes me feel a little better knowing that I wasn't alone struggling, but I don't like the way I reacted to the struggle. Like, it'd be one thing if I took 3 losses and then said, okay, shut it down, I'm not on my game today. But to take like 6 more or 7 more, 8 more after that, like, what was I thinking?
Yeah, so the hard part about Tuesday for me was, I was well positioned on a lot of really good trades, and then it just seemed like every single time on Tuesday, like structure didn't mean anything.
Mm-hmm.
It was just like, there was like a period where, we were trading like 40-point range, and we were getting these 5-minute candles that were 30 points wide, just up and down, up and down, up and down, and every single one of those was just, at least in my opinion, was just to get people out of the trade.
Mm-hmm.
At least frustrated. I mean, because we were in that range for 2 hours.
From 11:15 to like 1 o'clock.
It felt very manipulative the entire session.
Yep.
Funny you should say that.
Yeah.
They.
Yeah, not they. I'm sorry. I was thinking more along the quarterly theory lines.
Yeah. So, but looking back, I mean, that was a pure manipulation day. And just, kind of, I knew that going in, and we talked about it on the mic. And so, and then, basically I kind of just walked away. But I think the learn or the teaching point I want to talk about is So taking Tuesday and not replicating that into a Wednesday, Thursday, Friday scaredier process kind of trading.
Mm-hmm.
Because when you have those days where you hit where you have, a tough day or a bad day, it's hard to come back the very next day and be like, well, I'm just going to do my normal thing.
Yeah.
Because
Yeah.
because when you have a tough day and it doesn't seem like anything's going your way, I probably on Wednesday had 2 setups that we were on mic, talked through the entire thing, went exactly where I thought they were going to go, and I just didn't click the button.
Mm-hmm.
It's just one of those things where it's like it's a learning moment on that fact, because I mean, I knew what I wanted to be in, but it's just the risk factor of being in that trade. And I don't know if it's just because I had a bad day Tuesday and kind of looking back, I was a little, I guess confidence on the setups or whatever. I don't know what it was, but Wednesday, Thursday, I just kind of had okay days. It wasn't anything to ride home about. And then obviously today I had a really good day. Kind of, but on top of that, it was like 2 days of where it's just like I don't know if it was confidence or trust in the setups or whatever it was, but it seemed like every trade I wanted to get in worked. And then when I would get in one, it would slam right back in my face.
I hate that feeling.
And it's just one of those where I felt like nothing was going right on Tuesday, and I kind of went into Wednesday a little bit hesitant.
Mm-hmm. Yeah, but it sounds like you worked through it pretty well, though.
Well, yeah, I did like 40 replays.
Ah, yeah. Replay, huh?
Yep.
That is always the cure for what ails me. Babo, what about you?
All right. It's an ugly, but
Nobody has a good.
This is a good and an ugly, so it's both mixed into one. So on
is it the long?
It's both. It's both the longs. So on 1031, if you draw your attention to 1031, you will notice that on 1031, which was a big uppy day. It was a big impulse day through that that daily candle down. I had the trade idea early in the day that the peekaboo of Euro session lows, like overnight lows, I had the idea to wait for that to be peaked, and as long as we had some type of initiation or some type of setup there, that area I wanted to trade. So I was on voice long at I got the entry right here. 14,339, folks.
Oh my goodness.
14,339. I was long a single contract I added on the way up. Flary, Allah.
There you go.
Got to a full position size, scaled out into 14,400 a batch, and then scaled. Had a great exit on one more at, and this sounds like whatever, but it's not, at 430, 14,430. So
banger.
Banger. And then had one left and wanted to hold it to the close, or at least to the trade thesis, which was to trade through the like 815 high. That was the idea. We get, I wanted to see us trade through 450 ish from that entry. Well, it was 11 o'clock. I was like, I'm done. I didn't want to be on voice anymore. Not because I don't like it, but it's just like that's late in the day. I'm ready to go do other stuff. So I just slid my stop up to some arbitrary level and came back to that contract being stopped out in that 380s area, something like that, only to see it continue to run all the way past my target, 50 points past it. And so I learned 2 things. One, I've learned this a million times, like let the trade, if you have an idea, let the trade idea that you have worked so hard to discover, if you have an edge, honor that work and let it go to fruition. I didn't do that day. Annoying. Now, there's no guarantees that would have went there, but it's annoying to look back at that early in the week and see that I was on the right side. And so I said to myself, if I get that trade set up again, I'll take it, and this time I'll do it the right way.
Mm-hmm.
If I get it again, we'll nail it. So if you look at the setup into the next day, the same opportunity presented itself the very next day. And your boy here hitched his wagon to it once again over in the Avanta Trading Discord. Actually, this was actually before we were even on mic. This was
this is like 7 a.m.
Yeah, 7:55. I've been getting to the desk earlier because there have been some really good trade opportunities coming out of the 5:50, 6 o'clock in the morning up to about 8 o'clock. There's been just some really great opportunities this week. And I noticed that looking back over the last few weeks, like I should get to the desk early and see if these setups are there. And if they are, take advantage of them. So I was long from 14 to 28.75, which is a pretty saucy entry. 6 points of heat, I believe, on that trade.
Oh, that's beautiful.
And I was flat by 667, which is a very small trade, not even 40 points, a little over 30. I was like, well, I'll wait until the open and then get back into the trade. I don't know if you guys noticed what we did that day as well.
I'm looking at it right now.
We closed at 14,760, and I was long from 14,000 to 28.75. So again, my target was to trade through the highs at 95, and I did not honor the work 2 days in a row, and that really.
I thought you said there was a good in here.
The good is the
trades were good at least.
the good is this is that if you can quantify the market into a digestible form of data, whether that's using time as a reference, volume, delta, or whatever, and you can take the idea and squash it down to a definable thing, like when the market behaves this way, this is what I will call that, and that usually leads to this. And Flaherty's really good at that, and that's an area that I'm continuing to grow in. So the good is that kind of work really pays off. I mean, there's some stellar entries in this chart, but the other side of the work of allowing it to come to fruition instead of thinking like, well, I'll close it out here because I took it with some size, so that was a good way to start the day. And then when we get to the regular market, I'll jump into a trade. The bad is not holding to the process fully. The good is the process is really good.
I think you can call that ugly. I think ugly, that qualifies. Doing the same thing 2 days in a row.
It's ugly. And being on the nut low of the strongest trend days of the last 6 months, 2 days in a row, dude.
That's gotta hurt.
Yeah, it's really tough. I did dig out I had another good trade that I did the same thing on, honestly, on the 11-2. Again, there was a trade set up there, took it, and I closed it out at targets, put my stop at a stupid random spot because it was 11 o'clock. I'm going for the day, and we went up, eventually went all the way to
15,000
15,000, and I was flat out of that trade at 940. I mean, so still that was a better trade, but still, just those things I've just noticed those that I need to sharpen that up a little bit. Because 3 days in a row this week, it wasn't because of a red P&L day necessarily that would be frustrating. It was, and so I don't want to sound like pretentious or whatever, but it's as frustrating when you have everything lined up and you take the trade and you shoot yourself in the foot by not sticking to the rest of the plan.
Yeah, I think we all experience trying to outsmart our own trades. I've done that. I can't count how many times. I finally just had to start walking away from the computer once the trade is on. It's like, you know what? The stops will take care of me. I'll go do something else.
Yeah.
Yeah.
So that was my ugly. 3 days in a row, buying the nut low almost, and
every time I keep adding a day to it, man. It's gonna be 4 days in a row in a couple days.
No, I didn't do that today. I wanted to buy it today and didn't get a chance to. So,
all right. Well, thanks for sharing that, man. I know the ugly ones are the hardest ones to talk about. Flary, you got anything you want to tell us about?
Shit. I thought we had to do good, bad, and ugly, so I was prepared for all. And then when you said we had an option, I was going to go good. But after hearing Baba's, Dude, I almost feel bad sharing the.
I gotta hear the good too.
I took the same trade. I just didn't do what you did, but
I appreciate that. Thanks.
yeah, I'll get
3 days in a row. Did you take the same trade, Flary?
not today, which was my ugly.
Okay.
So let me run through them all three real quick.
Okay.
I'll be quick. So the good was I was bullish all week.
Mhm.
I track trend based on gaining or losing the move to the low or the high, and buyers in ES gained the move to the low on Monday. NQ lagged a day behind, and they just set the pace. ES did a trend start, which is like my A plus setup. ES pulled into a trend start. I trade NQ levels off of ES. So Monday I bought ES's pullback into the trend start. It was like 335 ish. It went 100 points within like 15 minutes, and I was done on Monday. Tuesday, this one was interesting. So Tuesday, same thing. They were trying to gain. They had to hold. We bought basically that same area again. 330 went about 150 points. Done pretty quick. Wednesday, this was the big one. Trading the data. Came to the desk in the morning. Overnight on Wednesday, Tuesday Globex Wednesday morning, buyers in NQ gained the move to the low, which activated a bunch of really key levels for me: trend start and trend breaks. The trend break was 14.413 3/4, and the trend start was 14.407. So that gave us a 7-point range. That was like the most A plus setup that I personally trade. So I was long 14.414 into that data, and I held it until I was kind of like joking with this meme target. I held that trade till through the data in the morning, through the opening range breakout, and into FOMC into 14.711. So like 711.
God.
So like the Slurpee trade was what we were joking about throughout the week. So Baba, you were in the same trade, man.
I'm gonna go jump off the back deck real quick.
Sorry, dude. I had my good that was my good. I had it all queued up that I was bullish all week, watching them evolve trend. It has a terrible ending to the story, but luckily Monday, Tuesday, Wednesday, really good days. But like similar to like what you said, like you had to walk away from the desk. Like I was in and out of the desk, but like that's one of those things where like you gotta just let it work. Like
I know.
gotta let it work. But so then we get into Thursday. This is where the bad starts. Well, we start approaching some levels that I would feel like, okay, if sellers are going to step in, like listen, as much as I went, even on Twitter and preached like when trend is up, you should just be buying. It's easier. We were approaching some pretty big high time frame levels, but the one thing that I think was really important is that you have to pick your spots if you're gonna fade trend. And I started fading trend on Thursday. I followed those rules and I meticulously picked my spots to fade trend, and I had a very profitable day fading trend. I took nothing but shorts on Thursday, and then I think we know that market went up. But I was able to have a good day. Now, come to Friday, the ugly, and it's really not like it's not super ugly. NFP has been walked back a lot. So if you go back and look at the NFP prints this year, they've walked almost all of them back before the IB is set. And I've taken this trade a bunch this year. I haven't sized it up as much as I wanted to, and today for whatever reason in this trend I was just like, you know what, like let's fill this gap, let's walk NFP back. We've broken through some big resistance and blah blah blah, which is like it's one of the cruxes of what I do is don't fade momentum. When buyers are taking out lost levels, when they're taking out resistance, there's no bigger aha than that to stop shorting. And listen, the market has this way of like giving you a little taste before, and so like I call it upstuck from poker. So I caught the short, and I was up on a pretty sized up trade today, and it moved maybe 30, 40 points in my probably not 40. It went like 30 points in my direction, and then they just reversed it right below the OR, right when they were about to get back into that gap. And I didn't cut it, and I took a little bit more than a full size stop on large size today, and took a max stop and gave about a third of my week back after being pretty spot on for the week. So, I mean, listen, it was still a great week, but that's not, I mean, like I broke rules today. I definitely did. So, after trading really well Monday, Tuesday, Wednesday, and then, even like trading counter trend on Thursday, but I knew what it was going to take to trade counter trend on Thursday. And I did that successfully, and then I came into today and broke some rules, and the ugly is there was some ego in those trades, and the market just has a beautiful way of sensing that, and again, it's Friday too, so it's the beauty is I get 3 days to think about it. But so my ugly is after being sort of in the zone and in the pocket and following rules, and then being meticulous on when I wanted to fade this market, and even being wrong, but still finding a way to be profitable on Thursday. Today, I sized up on a setup that I believed in, which is, sort of good, but the ugly was I believed in it too much. And you just, I don't know about you guys, but like when you're really convicted on an idea, when the obvious punches you in the face, you go, yeah, yeah, okay, yeah. Oh, sure, you can't get back into the gap. Oh, sure, you're back in the opening range. Like, oh, whatever. And today was one of those days where like you're watching it happen, and I should stop out of this trade, and I just didn't. And I took about a 2R loss on or 2R normal size loss on much bigger size than I normally would. And of course, it's the time I size up on a setup that's worked 90 something percent of the time this year, and it got it stuffed in my face. And do I take that risk if I hadn't had the Monday through Thursday that I had? Probably not, but I did. And
but you'd still take the trade, though, wouldn't you?
Oh, I still take the trade. I'd still take the trade. But honestly, had I not been sized the way that I was, I probably would have executed differently. I certainly would have executed differently. So that's the ugly, is that sizing up is hard, man. I mean, that's just the journey that I've been stuck in. Like just to be like, I've been stuck in the journey of trying to size up for like 6 months, and every time I take that step up to the big game, to the 5100 game or whatever it is, they just the pros have a way to remind you that you're a 612 player.
Yeah, it's the gulp limit, right?
Yep. So that was that day for me. So ugly, and unfortunately ugly on a Friday is like the most painful. So little ego swallow, little rule break, but it's still a good week overall. But man,
let me ask you this, Flary, did you take any more trades after that?
Zero.
Okay, that's I think you can feel good about that too.
No,
because you did recognize that it was time to shut it down, and you did.
The boys on this call will definitely verify that there's a version of me that would have gone and blasted several more contracts.
I think there's a version of all of us.
Yeah, I mean, it just is what it is. Like you just it becomes this like this thing of just disappointment. Trading has this like weird thing where like you just have these mirror moments, man. I'm telling you, where you're just like, how am I still capable of this? Like,
right.
It's just like, it's so frustrating. But it's also like the most raw, like peel the onion thing. So like these ugly days, they suck, they hurt, but they're helpful if you can actually take something from them that again, by the grace of God, there go I. Like I'm still capable of this stuff. And today was one of those days, but also, to your point, I would have, like, oh, I got to get this back. Oh, I got to get this back. No, you know what? I said I was going to do this. I said I was going to, this is my setup. I believe in it. I'm going to try. I'm going to size it up. When I sized up, I made mistakes that I typically wouldn't have made at a smaller size. So that's it. I'm done for the day. And you know what? Take your licks and enjoy your weekend, you idiot. But
well, I like to say that it's not a loss or it's not a loser unless you refuse to learn something from it.
yeah,
I think that's the key, like you said. Like, learn the lessons. You just paid for the tuition. Like, make sure you get your money's worth.
Yeah. Well, we did. We got there.
I mean, some of us are always going to Ivy League educations, but
Yeah. So my 6-year-old, 75-point ripper off of NFP News, and me, not so much.
She's buying you lunch.
She might have to.
All right. Does anybody else have any other comments or anything I want to bring up here for this segment before we move on?
I just would like to point out the other thing that's funny about trading. So it's funny, like Flary, we've talked this week, but not really much about trading, or in the last 10 days. Like, we haven't talked about levels, the market, the direction, or whatever. And it's funny that their entries into those positions were generally in some of the very similar places, except the day that you faded, I was long as well. But and then the thing is like the fine line between a banner week, which this week for me had the makings of the potential for, because I was on the right side of 4 of the most bullish days that 3 or 4 of the most bullish days that we've seen.
Mm-hmm.
But like the capitalizing on the work that you've done to put you in that position is the like next iteration of, or is a continual iteration of this journey that we're all on, because my week didn't end anything special. It was just meh, nothing.
Right.
But it could have been.
Dude, I could have ended my week meh. I thought about it. I debated it. But
yeah,
probably felt better to end it pretty good.
I had an idea. I sized it up. If my thesis would have been correct, this would have been my best week in trading ever. And so, I strategically risked it. But I'll be honest. My initial thought was, dude, look what you did this week. Why would you come into this and try to mess around? We're up 5% in a major index, in a major futures product. Like, you're gonna step in and fade this thing. My first instinct was to just put one micro on and then just sit through it all day. Just literally buy the open or sell the open and then just sit through it and see what happened. And that would end my week. At least I had some, skin in the game. And, to your point, like, it's crazy how you can get to Friday. I mean, PAX kind of, capital preservation, like, but, listen, you don't get your best week ever by not taking shots, and took a shot on a setup that listen, I believed in the setup, and unfortunately I caught the 7% it didn't work on size, and it is what it is. But yeah, listen, it's part of the game, and it's part of the evolution.
Well, I think you're less upset about the results of the trade not working out and more about the way you managed it, I think, right?
Oh, if I would have cut it for a normal loss, I'd be totally fine with it. I'd be totally fine
exactly.
with it. I carried it. I carried it about 15 points further than I should have, and that 15 points hurt. So
it sounds like me on M period.
Yeah.
All right, should we do some bold predictions and wrap this thing up?
Let's go.
All right. Does anybody want to kick us off? I've got one.
Fire.
All right. I am going to predict that this coming week, Michael Burry is going to delete his Twitter account again.
I love it, dude.
While I was doing my research, I found a great tweet. I think I shared it with the group here. Somebody posted that Michael Burry's called the last 25. He's correctly called 25 of the last 2 recessions, I think is what it said. I fucking love that. Okay, who's got one? What do you guys got for us here?
Bold predictions.
The bolder, the better.
Man,
We're gonna grade these next week.
I got very particular because I felt like it needed to be completed by next week. So I was trying to find something that I thought would happen dramatically throughout the week. So the AI stocks are moving. As you know, of course, this market is ripping, but big move to the lows put in some of the AI stocks. So ticker AI, which is sort of like the go-to. There's a gap at 3190, which is a decent move away from where we're at. So I think AI fills the gap, and then it just snap drops like 10%. So I think you have
this gap?
In AI 3190. Yeah, so we're trading. Where did they close this thing? 28.50. So
that's a massive gap.
Yeah, so we shoot up. We fill the daily gap to like 31-ish, right? 31.90 up in there, the cash gap, if you will. And then I think we just drop it 10%, because one, this market has just been getting beat up, and two, the trend start of this big move is all the way back down at 24.25. So
another gap down there too.
Yep, exactly. So I think we pop up, we fill that gap, and then we shoot back down. So 31.90, and then back on down. So AI makes a continued move up, and then just gets nuked next week. So you see like basically a big shakeout next week in the AI sector.
I love that. That's bold. It would have been bolder if you said it filled both gaps, but we're going for accuracy too. Baba Banks, you got something you can top that with?
Well, I have a trading related one, but I don't know if you want to hear it or not.
It better be bold.
It's pretty bold.
No. Okay, all right.
So Bitcoin is trading currently at 34.
I knew you were gonna do crypto.
It's trading at 34,698 currently, and I venture to say that Bitcoin, we trade back to the other side of this whole deal. So below whatever this is that bold enough to say 32.8? It's Bitcoin, so probably not. But
really
32.
Well, yeah. Actually, I don't know. In this range, I'd say that's pretty bold. 32,800.
By Friday, we trade 32,839.
32,839. All right, let me get this on this chart.
Yep.
All right, thanks.
I'll be honest. I really didn't look at anything for the predictions. To be.
That's right. You can pull something out of your ass.
How many banks crash next week?
I'm gonna say that as much as they're propped up right now, I'm gonna go with 0.
0? That's a bold prediction, actually. That might be pretty bold.
I thought Powell said the banking industry was perfectly sound.
Yeah, didn't we lose 2 this week?
Oh, did we? Did we really?
I think so.
It's perfectly sound because the Fed's giving them lines of credit.
So 0 banks fail next week? Is that what you're saying? Is that what you're going with?
Sure, that's fine.
I like it. Well, let's double check the numbers for last week.
Shit, we're gonna have a major crash. U.S. Bank.
U.S. Bank goes down. Wells Fargo folds.
I did not hear a failed bank went down. Actually,
I've got a failed bank list here, but okay. Let's see. Iowa Trust and Savings Bank failed today.
Iowa. Yep. Bullish.
Absolutely.
Bullish.
It's been a while since they put one on here.
Yeah, July was the last one.
Yeah.
In the spirit of like fading Baba in some of these these topics, like I was so close to saying my bold prediction was Bitcoin trades 26,000 next week. It's not even funny.
I was wondering if someone was going to go for one of those.
Oh man, I was looking at it. I'm like, dude, how funny would it be if they just walked this entire?
I really wanted to do something about SBF sentencing, but that's going to take like 6 months to play out.
I didn't know it didn't have to be market related. I'm going to be better prepared next time for just like
we can definitely come up with some more
some random like celebrity event or something.
We're new here, Kyle. We don't know what we're doing.
All right, should we wrap this thing up, guys?
Let's do it.
All right, folks, that's going to do it for today's episode. I would like to say thank you, Baba, Mr. Banks, and Flary for joining me on this fine Friday evening, and everybody listening for sticking around to the end. Remember to check out the new Combined Discord, where you can trade with us during Friday M period challenges, or you can tune in live to these recordings. And please show our panelists some love by checking out their links. We'll have all that stuff in the show notes, so you can check it out on your own convenience. We'll be back soon with another bold episode dripping with alpha, but until then, share this with your friends because, like a trap trader, you're stuck with us.
Let's go.
This podcast is intended for informational and educational purposes only. It does not constitute financial or investment advice and should not be construed as such. The hosts, guests, and contributors of this podcast are not licensed financial advisors, brokers, or professionals. Any trading or investment decisions made based on the content of this podcast are solely at the listener's discretion and risk. Trading and investing in financial markets carry inherent risks, and past performance is not indicative of future results. Listeners should conduct their own research and seek advice from qualified financial professionals before making any financial decisions. The views, opinions, and information shared in this podcast are those of the individual contributors and do not necessarily reflect the views or policies of the podcast creators or associated organizations. Produced by China Shop Productions.